Okay, guys, welcome to my channel. My name is Sunday True Love, and this is my first video on forex trading. To be honest, I have not posted anything on FX in this channel. This is the first time I'm posting a video on FX in this channel, and I'm going to go straight to the point. And today, what am I going to do? I'm going to teach you guys how to catch continuation entries on any forex market or any currency pair. So we are going to use USD as dollar pound, dollar Japanese yen as our point of interest. Today is 15th of October 2025 and the time is 10:19 a.m. I've already done my analysis earlier this morning. I'm waiting for price to get my level before I take my trades. But I just thought of using this little time to show you guys how I do this. Now, first of all, I do my structural analysis from the daily time frame to 4 hour, 2 hours, 1 hour time frame, and then I use a 15 minutes and 3 minutes time frame towards to do confirmation for my entries. So this is the 1 hour time frame, and basically USDJPY is bearish. So what we are going to be looking is for what? For sell positions. We are going to be looking for sell positions. Now, I've already mapped out a break of structure to the downside. We know what a break of structure. There's a break of structure here. There's a break of structure here. We know what a break of structure is. Let me quickly show you what a break of structure is in case you don't know. Let's say that a market is trending down here, makes a quick retracement move and comes down again. So whenever in a downtrend, whenever price breaks below the previous low, there's a what? There's a break of structure. So there's a break of structure here. There's a break of structure here. And then the origin of that break of structure is called what? It's called an order block. So that is what you guys are seeing here. There's a break of structure here to the downside. And this is the origin of this break of structure. It's called what? Order block. This other one here is called fair value gap. I'll come to it. Let's get rid of this. Let's check that of what? Of an uptrend. So if the market is trending upwards, go like this, price goes up, make a retracement move, and then breaks upwards. For each time price makes a retracement move and then breaks above the most recent high, is what is considered a valid break of structure. So there's also a break of structure here, BOS, and there is also an order block because this is what the origin. There will definitely be an order block here. So that is it. So once you map out your break of structure, you're looking for continuation entry. Remember, we're looking for continuation entry in a downtrend for USDJPY. I'm looking for a continuation entry. So I've mapped out a break of structure here because this is a previous low and price have broke below this low. And then there's what? Break of structure. This is the origin. This is the last, and the origin or the order block is the last candlestick before the what? The printing of the what? Candlesticks that led to that break of structure. That is where the origin lies. Now, you'll be asking, what is this other man doing in between that I labeled FVG? That FVG labeled there is called what? It's called fair value gap. Now, let us find out what a fair value gap is. Let's find out what a fair value gap is. Fair value gap is usually formed most times when there is what? Three consecutive candles. This is the first candle, this is the second candle, and this is the third candle. Now, in a downtrend, in the presence of three consecutive candles, the distance between the low of the first candle and the high of the third candle is called what? A fair value gap. But remember, not all times that fair value gaps are what are formed. For example, this is three consecutive candles, 1, 2, and 3 here. There is no what? There is no FVG because these weeks here, have what? Have covered what? Those FVGs that are supposed to have existed here. The long weeks upward have what? Have gone towards to cover those FVGs before what? Before continue breaking downwards. So there is no presence of FVG. But because the week here was not able to what? To overlap the low of the first candlestick, so there is presence of a gap here, and those gap needs to be filled, and those gaps hence are called what? Fair value gaps. So what I will do is that I'll wait for trade because this is a point of interest for what? For institutional traders who use smart money concept. So what I'll do is that I'll wait for price here to get to this point before what? Moving downwards again. That is a continuation move. So I'll wait for price to come here before what? Before making a continuation move downwards. Now, how do I place my entries? I have two methods of placing my entries. I can use aggressive entry. I can use confirmation entry. Now, what do I mean by aggressive entry? Aggressive entry is that I'll set a sell limit order here so that immediately price taps into my sell limit order, my order will be what? Will be activated, and then I'll put my stop loss somewhere below this what? This candle wick here, and then take profit take profit will definitely be in the next order block or the next support zone that is in that what? In that market. So this is the next order block. So I'll take my profit around this area because I know that the price will definitely get the next movement will also break this level and form another break of structure, and price will get to that area before anything happens. So that is how I take my entries for the aggressive entry. But then for confirmation entry, I'll wait for price to get to this level. When price get to this level, I'll now switch to what? Switch to 15 minutes and 3 minutes time frame. I'll use the 3 minutes time frame to what? To look for confirmation. Once I get a confirmation here, I would enter the trade. Now, I am not going to show you how I do it because I mostly use confirmation entries most times because sometimes aggressive entry can fail you. So I mostly use confirmation entry because what if I use an aggressive entry and it happens that the price will actually break this FVG, break this other block and continue what? Upwards, thereby forming a change of what? A change of character to the upside. It happens sometimes as well. So I definitely mostly use confirmation entries. So like I said, today is 15th of October 2025 and I'm waiting for this trade. I've mapped out my FVG and other block. I'm waiting for this trade, this price to get to this level before I take my trades. So when price gets to this level, I am going to do another video showing how I use confirmation entry to take trades in this FVG, fair value gap, and other block. Thank you guys, and let's hope this goes to our favor, and then you'll be expecting another video.